Owning your dream home is now easier than you could ever imagine. Avialand will be with you every step of the way so you don't have to worry. With a personal account officer to make sure your loan application is hassle-free. To a well-made house built to last. Crafted with your growing family in mind. All within a safe and secure community to set the stage for life's biggest milestones. A house is more than just a roof over your head. It is the setting for the life you create. Avialand makes this dream happen so you can focus on pursuing all your other dreams. Premier family living made possible by Avialand.
Philippine Daily Inquirer would like to thank the following sponsors for making this live stream event possible. Ortigas Land. We build great places for life. Avialand Incorporated. Premier family living made possible by Avialand. Santa Lucia Land Incorporated. Building dreams. SunTrust. Home for every Filipino. We'd also like to thank Inquirer.net.
Good day, everyone, and welcome to the latest leg of Inclusive, the Inquirer webinar series presented by the Philippine Daily Inquirer's Property Section. I am Texa Maniego, editor of the Property Section, and I will be your host for this live stream event today entitled A Post-Pandemic Path for the Philippine Real Estate. It has been over a year since we had to deal with the pandemic and the varying degrees of lockdowns that have remained in place. We witnessed how the pandemic upended our lives and disrupting businesses and placing the economy in a recession. Today, we will be revisiting the Philippine real estate industry, which, like all other businesses, was not spared from the challenges caused by the pandemic. The impact, however, varied across segments, some bearing the bigger brunt, such as the hotel sector, while others saw new opportunities, such as the logistics and warehousing sector. Nevertheless, real estate was among the industries that have exhibited a certain degree of resilience amid the pandemic. But now we ask, how close are we to a recovery? What are the key enablers that will sustain the industry's rebound? What kind of new opportunities await real estate players, investors, and home buyers in a post-pandemic era? But before we start our discussion today, let me thank again Ortigas Land, Ovia Land, Santa Lucia Land Inc., and SunTrust Properties Inc. for supporting our webinar. Also, allow me to give you, our viewers, this exclusive offer. The Philippine Daily Inquirer is offering a 30-day free trial of its digital edition, Inquirer Plus. We are flashing the details on your screen on how to take advantage of this exclusive offer. To know more about the Inquirer Plus subscription, please visit shop.inquirer.com.ph. And so, let's start. Our first panelist is actually a mainstay in our webinars, providing us with hard data and the right statistics to make better informed decisions. Joey Roy Bondoc is an associate director at Colliers Philippines. He covers office, residential, retail, leisure, and industrial segments, conducts macroeconomic analysis, and regularly assesses the impact of economic growth to the real estate sector. Our speaker also handles client engagement through market overview presentations to equity analysts, property investors, and real estate firms. Welcome, Joey, and may we hear some words from you?
Hi, Tech. Good afternoon. Also to my fellow panelists, Chanlo and Claro. The Philippine property market definitely experienced disruptions in 2020. In fact, we're even seeing that in the first half of 2021. And now that the government just announced a stricter lockdown across Metro Manila and nearby urban areas. So we're likely to see again another round of disruption to the country's economy, especially to the property sector. But prior to this imposition of a stricter lockdown, we were really optimistic because we're starting to see office leasing queries increasing, transactions also improving, and even launches, completion of condominium units across Metro Manila rising. And even pickup of condominium units in the fringe areas, peripheral areas of major business districts has also been improving. So we were really optimistic, and in fact, we were seeing green shoots of recovery. But let's see how this stricter lockdown will affect and disrupt this improvement that we were, in fact, seeing already. So, interesting discussion this afternoon, and I hope to exchange information with my fellow panelists.
Thank you so much, Joey, and I'm really looking forward to this afternoon's discussion. Meanwhile, joining us today also is Claro Cordero Jr. He is the Director and Head of Research, Consulting and Advisory Services, which is the unit responsible for the breakthrough property market research and thought-leading publications of Cushman and Wakefield in the Philippines. Claro has almost 20 years of solid experience and exposure in market research and analysis, strategic, corporate, and financial planning, investment and capital markets advisory, risk management, project management, general business management, and development work in both the private and public sectors. Welcome and good afternoon, Claro.
Hi, good afternoon, Tech. To everyone watching this afternoon, and also to my fellow panelists, John Lo and Joey. Good afternoon to everyone. So, similar to what Joey just mentioned, we are very excited to learn in this discussion and to exchange ideas of what we think is the current state of the real estate market in the Philippines. I mean, we always, I'm sure, among the three of us, we're always asked this question whenever we go out. We always we are always asked about how is the market performing, when is the recovery starting to take off. So I think just to start with, we noted an improved performance of the major demand indicators for the different property subsectors in the first half of 2021. But this is, I think, mainly due to the low base effects. Last year was really an outlier in terms of performance of all the demand indicators. So coming from that very low base, people are, the market is very much upbeat about the next few months into 2021. And the improvements were also direct effects of the increase in the level of mobility and business activities despite the break and return to stricter community quarantine in late March to April. But like what just has been announced this morning, we might be in for another challenging second half. Just as we are starting to see some opportunities in the market, we're now faced with stricter mobility conditions. And so overall, I think the improvements in market activities were not sufficient to lift the overall health of the market. Overall, across the sectors, Zoe mentioned about office and residential. I think retail market has been similar to last year, although capacity and foot traffic has improved from 20% to about 40% this year, but it's not enough. Definitely not enough to recover the lost ground from last year. So as part of outlook, I think we think for the other subsectors like hotels, we do not see a major recovery in the short term, as leisure travel remain restricted and border controls have been restricted again. So we think all these new set of restrictions will definitely have an impact on the pending recovery of the sector.
Thank you so much, Claro. And despite the recently announced lockdown, we're still hoping to see that continuing green shoots of recovery for the sector. With us also this afternoon is Janlo de los Reyes, Head of the Research and Consultancy Services Department of JLL Philippines. Janlo is a licensed appraiser and broker who has over 10 years of extensive experience in strategic corporate financial planning, financial and property valuation, in-depth industry-specific research and analysis, general business management, and development work. He manages the preparation of client-specific market research and oversees the collection of data and information, which is key to JLL's strategic counsel and services. He also plays an important role in JLL Technology Steering Committee. Welcome and good afternoon, Janlo.
Hi, good afternoon, Tech. So thank you again for inviting me to this webinar, and good afternoon to my fellow panelists and everyone listening in. So from our end, what we're seeing is really a mixed performance across different geographies and different asset classes. So the reason for that is because each sector and each geography is coming from a different journey throughout this pandemic, right? So for Metro Manila, where we're seeing more lockdowns compared to Cebu and Davao, who have been ahead of that geography in terms of where they are. Similarly, in terms of the sectoral performance, there's a lot of variance across different asset classes. So for office, there's still a bit of slowdown, although there is a noted improved sentiment in terms of activity. And what we're seeing there is more of improving lease volumes. So in terms of our data, what we saw, at least for the first half of this year, is improved take-up compared to 2020. So now we're seeing an average quarterly demand of around 175,000 square meters, compared to around 112,000 square meters in 2020. But still, that's quite below the 300,000 square meters on average every quarter that we saw in 2019. So where we're seeing resiliency in terms of the office demand is really coming from the sub-industries who have been, I would say, resilient throughout this pandemic. So we're talking about e-commerce, logistics, and also financial services, as more companies and organizations and even individuals are turning online and digital in terms of their business and also personal transactions. In terms of the logistics, I think it's been the darling of the market for quite some time, given the strong interest that we're seeing for that domain in the past couple of quarters. You would see that also in terms of the leasing volumes for logistics and industrial space, wherein we saw around 40% increase if you're going to compare fourth quarter up until second quarter 2021. This has been really driven by the e-commerce market as more people are leveraging on-demand services because of restricted mobility. At the same time, third-party logistics as well as FMCG. There's a lot of interest in the cold storage space as well as data centers, and these are like some of the sectors, at least sub assets within the industrial logistics market that we would see grow in the next couple of quarters and years. In terms of the retail market, again, it's still quite subdued. That's what Clara said. There's a lot of store closures. It's really led by restricted mobility and footfall within shopping mall developments across different malls in the Philippines. And in particular, we're seeing a lot of movement within the F&B segment. So what's interesting is that that category is the one leading all of the closures as well as all of the openings. So a lot more F&B because of the restricted footfall within malls and like the limited dining options are turning online as well as through online on-demand services platform to help fuel their business. At the same time, I think for everyone who knows, like more staying from home or working from home, studying from home, there's a pickup in terms of gadgets, technology, and categories in terms of business expansion within the retail space. In terms of residential, still pretty much the same, I would say. In terms of the performance, it's still quite weak. We're seeing both weak leasing activity and also sale activity in the market. If you're going to take a look at the sales performance, there are a lot of units now that have been reopened, and that has been really flooding the market in the first half of 2021. And then if we're going to look at the hotel market, definitely still buoyed by the interim demand coming from repatriated Filipinos. So what you'd see is really a separation of the performance. So you have the quarantine facilities who are doing really well across different geographies. And what's interesting to know there is a lot of them are reporting 100% occupancy, even though that they are not physically occupied, as they have been tagged or at least dedicated for government agencies to house some employees or even the repatriated Filipinos. Meanwhile, if you're going to look at non-quarantine facilities, meaning the ones dedicated for business tourists and also leisure travel, still quite low in terms of overall vacancy. And similarly, for the recently opened like multiple use facilities, meaning the hotels will offer both quarantine rooms and also non-quarantine rooms within their development. What's interesting for us to note in the hospitality space is that there is a lot of convergence with regard to room rates, particularly the non-quarantine facilities, meaning there are some segments of the market, particularly upscale and upper upscale, zero difference or variance compared to the other room types. So there are like 500 peso or 1,000 peso difference. And what we suspect is that this will lead to a shift in demand for a lot of guests who are comfortable traveling and staying in these hotels. You might opt for a better quality room just because of that price differential. I think
Thank you.
overall, yeah, I think overall, sorry, just to close it, overall, we're seeing like positive developments in the market, but still quite a wide variance. And I think everyone is looking at a cautious optimism for the second half this year, mindful of any other developments within the pandemic and any other policy changes that might shape the narrative for the real estate market moving forward. So that's our outlook and view. Thanks again, Tech.
Thank you, John. Though hearing it from three of our panelists, we're definitely off to a great start. And I'm sure everyone's even more excited to hear from our speakers. To our viewers right now, please feel free to join the conversation and ask questions, and we will try to accommodate as many as we can over the next half hour. But for now, let me throw in the first question. How really is the Philippine real estate industry today? I mean, what's the real state of the real estate? Maybe we could start with Claro and then Joey and Janlo.
Okay, thank you, Tech. Yeah, I'd like to dissect the question to be able to answer it correctly. So, the first part is how is the Philippines real estate industry today? As we've mentioned earlier, the demand indicators for most sectors are still reeling from the effects of the pandemic and the new normal of doing business. So, a lot of office operations, for example, remain in partial capacity, while most are now rationalizing their space needs. So, this may have some immediate effect to the demand for office space and has been the motivation for some of the landlords actually offer discounts. So we noted that average rents, for example, are going down, or have been going down for the last 2 quarters. So residential condominium sales, on the other hand, while they're picking up, are still below, we noted, below pre-pandemic levels. And traffic, as mentioned earlier, for retail and hotel occupancy remain dependent on the openness of the economy and the restrictions set by the government. So how near or far are we from the recovery? If we are to ask, how far are we relative to recovery, the last part of the question is actually correct to qualify whether we're talking of pre-pandemic levels, or relative to the performance of the industry last year. We are definitely far from pre-pandemic levels if we are to judge the overall health of the demand indicators, but we've noted a significant improvement from last year's performance of the industry. On a positive note, it's actually worth sharing that we are working with our regional and global counterparts, with companies who are still keen on setting up their operations in the Philippines. So that's something to look forward to. But in terms of timeline, I think they're looking at about 2022 to 2023 to realize those plans.
Thank you so much, Claro. Joey, I'd like to get your thoughts on that. I mean, we prior to the declaration of ECQ, we were already claiming to see green shoots of recovery. But what is now the actual state of real estate in the Philippines, and what will happen to the green shoots of recovery that we've been mentioning?
I hope Tech I can provide you a more optimistic snapshot of the Philippine property market. Unfortunately, that's not what we see at this point in terms of the office leasing. Rents are still down. Companies, developers are still dropping lease rates by about 20-30%. And in fact, we saw average lease rates dropping by 17% in 2020. And we again project a double-digit correction for 2021. For the residential market, in the pre-selling market in Metro Manila, we recorded 10,000 condominium units being taken up for the first half of 2020. And if you do a simple run rate, it shows that for the entire year, we will only record 20,000 condominium units. That is much lower compared to the peak of 53,000 condominium units we recorded in the pre-selling market pre-pandemic. But a positive perhaps for the residential market is that we're seeing take-up in the fringe locations, gaining traction. In fact, based on our data, the take-up in these fringe locations or peripheral areas has overtaken or outpaced the launches. So that is a pretty optimistic trend that we are seeing, with Makati Fringe, Manila North, and Manila South being among the more attractive locations. And then if you look at the retail, again, we're seeing rising vacancies across the Metro Manila. And our projection is that average lease rates in malls across Metro Manila will drop by 10% this year, somehow similar to the correction that we saw during the global financial crisis and Asian financial crisis. Unfortunately, hotel segment is not also doing well. Perhaps the only upside for the hotel segment is that they are being used as staycation and quarantine facilities at this point. But the average occupancy that we got for the first 6 months of the year is only 24%. And this is much lower compared to the 60 to 70% occupancy that we would record pre-pandemic. I would say that the only positive thing that we're seeing an upside for the property market so far is the logistics sector. We're seeing greater demand for warehouses and even the cold chain asset segment, which the Cold Chain Association of the Philippines is projecting to grow by 10% annually from 2021 to 2023. So perhaps 4 out of 5 segments not looking good at this point, but at least for the office and residential market, we hope that there could be some form of recovery by second half of 2022.
Thank you, Joey. I have a follow-up question on that, but first I'd like to hear your thoughts, John Lo.
Yeah, I guess just building on what my fellow panelists have shared. So it's really, I guess there's a wide variance, again, across asset classes. So definitely there are some leading sectors, I would say logistics and industrial, strong demand that we're seeing from there. And I think both near term and also medium term. So near term, we'll talk more about say cold storage for the vaccine facilities. At the same time, e-commerce, particularly for urban logistics, because we're looking now at moving the supply chain better or improving that supply chain, making sure that the products reach the distribution centers or sorting centers within the key cities within the Philippines, like Metro Manila, Cebu, Davao, and the like. Apart from that, there's also growing interest in the data center space, and that's one of the things that we might see grow, at least drive the growth for the industrial and logistics market. I think what's also interesting to note about that sector is that a lot of developers are looking towards that sector for growth as more developers, stakeholders are looking at diversifying their portfolio as part of their growth strategy given this uncertainty in the pandemic. For the office market, I would say it's quite fluid because it's really contingent in terms of the shape of recovery, which we talked about earlier, Tech. So it's really, if you're going to look at the decisions of occupiers, it's quite tied to how soon we find a recovery in the market. And it's still unclear when that will be. There are a lot of externalities that we're looking at, for example, this pandemic, this lockdown. So all of these will really play a role in terms of shaping what will be the real estate decisions moving forward. If it's going to be a sharp recovery curve for the market, then definitely they look at the existing space and see like, do we still need to be retrofitted or look at a different space if things are working as fine right now, or if it's for a longer view because there is a prolonged shape recovery, then they probably look at their overall portfolio and see where they can optimize some of their sites or see where they can find growth in terms of their expansion. For retail, it's still quite restricted, at least in the near to medium term. I think there's going to be a lot of transformation within this space as everyone's leveraging on e-commerce and online. So I think it's really more about finding the right size for spaces of these brands at the same time having that seamless integration between offline and online. So I think it's really more of that development within that domain, but still quite sluggish and quite slow, I would say. The hotel market is probably one of the laggards within the real estate market, as we see that it's really tied to the overall tourism levels, and that's going to be quite far ahead in terms of the recovery shape. Residential market is also quite split. I think it's leasing activity is tied to the growth of the office or recovery of the office sector, whereas the sale market is still quite sluggish in the sense that a lot of people are still holding onto their cash given the uncertainty in the market. And that's really reflected in the reopened units and the weak sale activity that we have experienced in the first half of 2021.
Thank you, Fernando. I mean, I think we all agree that prior to the declaration of another round of ECQ, it has become green shoots of recovery has become a buzzword. Does that mean that this latest declaration of ECQ would right away diminish all the small achievements that we have done over the last couple of months? And Joey, you mentioned 4 out of 5 seem to be in a not very good position. What can be done to avert this so-called another problem for the real estate sector? Apart from the vaccine rollout, what can be done? Maybe we can start with Joey this time.
For the office market, Tech, as I mentioned, we were already seeing positive sign because leasing deals were already gaining traction, were already improving. In fact, site inspections were also increasing by first 6 months of 2021. But again, this imposition of a stricter lockdown might really hamper the gains and that we recorded that we saw from January to June of 2021. I think, similar to what we always say, property companies, developers should innovate, otherwise they will evaporate. This is a market that you really need to be agile. You really need to respond to what the market requires at this point. I mean, for leasing companies, for occupants, they have been implementing split operations. So half of their staff working from home, half of their staff are reporting on site. So I think developers should be more proactive in responding to the demands of tenants. They should provide more concession, more open to, for example, provide free fit out period. This is, after all, a tenants market that we're seeing right now. And for the residential segment, as I mentioned earlier, you have fringe locations, peripheral areas in the business districts in Metro Manila that are doing well at this point. So I think developers should also be more strategic with their land banking strategies. Look at parcels of land that they can acquire near infrastructure projects lined up by the government. But I think developers should also start launching new ones, because if you launch new projects once the market recovers or once the sentiment fully picks up, then you're late in the game already. For retail, there are some innovations that we're seeing in the market. Vacant spaces being converted into flexible workspaces or fulfillment centers. And that will likely be the trend moving forward. Even hotels, some hotels are being used as, well, staycation, quarantine facilities. But we did a poll, a survey during our previous quarterly briefing, and 2/3 of respondents said they are willing to work in a hotel room or hotel space converted into flexible co-working space. So there are interesting innovations and new offerings in the market, and the developers, property players, and investors just really need to innovate because we believe that the situation at this point is very liquid. You need to be agile. You need to be proactive and in responding to the requirements of investors and end users at this point. Definitely, there will be opportunities despite all these uncertainties in the market. Even industrial, look at industrial. We're now hot on cold storage. There's a substantial requirement for cold storage facilities, mainly because of the need for massive vaccination inoculation across the country. So this is one segment that will really push the growth of the industrial segment moving forward.
I'm sorry, I think we lost connection there. Can we ask our tech team? Apologies for the broadcast interruption. Just if anyone from our tech team can assist us. I think they stopped.
Even industrial, look at it.
Maybe we can go on a break. Okay, I'm so sorry about that interruption. I think that's the problem with technology. But at least we're back. And again, Joey, please, sorry. You were saying a
Yeah,
while
I
ago
think
about.
about the industrial sector, right? I mean, there's a new subsegment that is really expanding, and then we're really hot on cold storage at this point, mainly because of the need to fully vaccinate Filipinos, ramp up its inoculation program, but also because of the demand for e-commerce, online shopping. So, as I mentioned, there are opportunities in office, residential, retail, hotel, and even for industrial, which remains to be of stable growth despite the COVID-19 disruptions that we're seeing in the market.
Thank you so much for that, Joey. Now let me ask Claro and Jando, what are the other potential enablers apart from the vaccine rollout for us to be able to better address this current crisis that we are seeing? Who wants to go first, Jando or Claro? Maybe Jando can go first this time.
Okay, thanks for that. I think apart from the vaccine, just the core of it, it's really more about policies, right? Like how do we use the government policies to help support the recovery journey across all sectors? I think that's what's being done now. For example, like the work from home extension is being discussed by the FIRB on whether the likelihood of that being extended. At the same time, what's the duration as well as what is the ceiling for the work from home. So those things will really help in terms of ensuring that the market is underway.
Okay, that's another glitch for us. Again, my apologies to our viewers and to our panelists. But Janlo, as you were saying a while ago, please continue. And again, my
Yeah.
apologies.
No worries. So it's really more, I would say, policies that will help support the recovery, right? So what kind of, for example, like the office market, we're looking at the FIRB, looking at the work from
It's
home
back.
extension. In terms of whether that's going to be, what's the length or duration of that extension, if it's going to be next year or the next 2 years. If also we're talking about the work from home ceiling, which is currently at 90%, will that be lowered? These will definitely play a part in terms of the office demand pickup, at least in the near term as well as long term. So of course, the hotel sector is also seeing a lot of strict compliance with regard to, let's say, safety. So I think those things are really the key in terms of helping the market grow also. So I think incentives will also play a significant role in terms of attracting investments and stimulating business activity within the real estate market.
Thank you for that, Jando. And now may we hear from Claro
Yes.
about other potential enablers for recovery.
Well, maybe technology, but that's well, I tend to agree with John Lo that policies are important, and in particular, I think transparency and predictability in terms of government policies are important information to investors, and very crucial. From the investment world, in the investment parlance, they are also similar to the COVID variant. So they're very much used to Greek letters like alpha, beta, delta, and all that. So alpha in investment world means the ability of the investor to actually diversify and be able to properly allocate the funds in other investment vehicles. So I think that is very important if we want to continue to attract investors, be it local or foreign. We need to have that level of transparency and predictability in what we propose, or what we legislate. So, having said that, there are a lot of important legislations that have been passed in the Senate and the House, and some are still pending. So you have the Valuation Reform Act, for example. You have the CREATE law, the FIST law, the inclusion of real estate practitioners and developers in the anti-money laundering, covered persons, the ease of doing business, among others. We need to have clearer guidelines and direction, so that the real estate sector can actually move on with alongside with the vaccination of the population.
Thank you so much for that. Now, I think one of the things that was able to showcase the resiliency of the real estate sector was the recent success of REIT offerings. I mean, despite the pandemic, we have seen a very strong appetite for REITs, with the two previous offerings being oversubscribed. Do you think REITs can actually play a crucial role, and how can it contribute to the industry's recovery? Maybe this time we can start with John Law, then followed by Joey and Claro.
Yeah, so definitely one of the instruments that have been gaining traction over the past year. I think it's really one way to diversify the portfolio by developers, at the same time access fresh capital to help them fund the real estate projects moving forward, especially that is quite tight and a depressed market. Or also, I think what's interesting to know there also is like what they're putting in as part of their recurring income portfolio. Whereas the first few tranches of developments that were put there are office, but now we're seeing a significant share of, at least a growing share of industrial and logistics, and we expect that to continue moving forward. And seeing that there is a strong demand and appetite for REIT, it's likely also that we'll see more developers turn to this instrument moving forward to fuel their growth amidst this pandemic.
Thank you. How about you, Joey?
As we always say, Tech, the REIT program democratizes wealth here in the Philippines, and it allows property players to divest and tap another source of funding. And not only that, while it's the major developers that are obviously utilizing tapping REIT at this point, there's an opportunity for smaller players. In fact, there's a news that PSE and the government would like to encourage the smaller players to also tap a REIT, and they use this as another vehicle to generate more funds and improve their property offerings in the market. But the fact that the developers remain confident in divesting office buildings shows the stability of the office market. And as we always say, office market at this point shows relative stability, and you have POGO, PPOs rather, that continue to occupy space. The POGOs have, they've left about 450,000 square meters of office space already, but you have BPOs, traditional companies, e-commerce companies that are able to fill the void, and really these companies continue to expand. In fact, we have a lot of clients that are looking for office space in Metro Manila and in key cities, Cebu, Pampanga, Clark, as well as Cagayan de Oro. So we are seeing green shoots of recovery also for the office market, and it supports the optimism of a lot of developers in utilizing REITs. I think another bright spot for REITs is the fact that the developers are also planning to divest industrial assets, and that's one of the reasons why we see developers aggressively modernizing their warehouses, because logistics demand will thrive post a pandemic, and this will be a good source of recurring income. The Philippines is in a lockdown economy. We are a consumption-led economy. E-commerce is growing. The use of online payment schemes is also thriving. So all these factors will eventually contribute to a more dynamic logistics sector. So we're likely to see more office buildings, more office assets being divested into retail vehicle, but I won't be surprised if we see more logistics and industrial assets also being utilized as REIT vehicles or REIT assets. And not only that, we're no more optimistic, and even we want to go a step beyond and look at other properties that are generating recurring income. You have infrastructure projects, toll roads, for example. So let's see. We're very optimistic that the REIT market will eventually evolve, and there will be more interesting offerings beyond 2021 and beyond the COVID-19 pandemic.
Thank you, Joey. Now, maybe hear from John Lo and Claro on about their take on REIT.
Well, yeah. For the REITs, I think it definitely is a good buffer against downside risk in the market, and a good alternative investment vehicle, not just for seasoned investors, but also for neophyte investors. So, as I've noticed earlier, when the lockdown was announced, just 10 minutes after that, you see the stock market was bleeding practically. I don't know if it's recovered at this point or as we speak, but REITs tend to give a good buffer against that, and a good REIT vehicle would be able to capture the diversity of the offering. And like what Joey said, we might be looking at other property sectors, but I'd like to extend that with saying we need to look at other locations as well, not just in Metro Manila. We need to look at other investment instruments or vehicles that can be tapped into the REIT market outside of Metro Manila, just so we can have that kind of diversity and crisis proof that we think the REIT is. So REIT has definitely that ability to diversify and simultaneously provide that downside protection. And I think it is a good time for REITs to actually flourish at this time. Although we're quite late in the game, but I think we are slowly getting into the hang of the market. Yeah.
Thank you so much. Well, we've heard it from you that among the enablers would be the vaccine rollout, REIT might help, and technology might also play a huge role. But what do you think is the best strategy that real estate players or the developers should adopt amid the uncertainties and the ever-evolving, highly cutthroat landscape? What other innovations should they bring into the table? Maybe we can start with John Lo this time.
Yeah, I think at the baseline, it's really, I guess, focused on health and safety, right? So I think that's the primary important element that stakeholders need to look at and make sure that they are complying with that one, making sure that you do have the adequate facilities, adequate processes to address any changes in the market. So definitely you can't prepare for everything, right? So at least you are prepared for different scenarios. Technology plays a significant role out in that sense, as it would also allow you to make sure that you are able to efficiently do your processing business. And I think that not only from the health perspective, but also in terms of operations. I think that's something that people have, at least organizations have seen, at least realized over the course of this pandemic, right? Like the technology is not really expensive. technology is not really quite difficult to implement or incorporate in the business because it doesn't necessarily have to be the high tech or kit that we're implementing or rolling out. It could be like really simple facilities and items that we're using that will really help our business and operations. I would say like specifically one of the things that have what we're having conversation with clients is that really how do we incorporate this level of technologies to help us bring safety to our spaces, to bring also efficiency and help us with our cost of these operations. Especially now that a lot of organizations are looking at human-centered design, and what we mean by that is not only organizations are looking at, let's say, physical or mental. We're talking about the holistic well-being of individuals, and really, technology is an enabler of that, really making sure that people are more productive. So if you're talking about some BPO companies who are really invested in their employees, especially for those who are working from home, there is also a level of productivity that they were able to maintain. Obviously, of course, it's different given the pandemic, but as you know, like with this pandemic in place, there's a new level of, I would say, operations, the way we're looking at risk tolerance or risk acceptance across different facets of the industry. And these are some of the things that we have seen that was adding in, let's say, the seating or let's say the connection and the like have really helped bring productivity to their business. So I would say it's nothing out specific because I think it encompasses different facets of the industry, and you would see that I would say refinement of existing processes and I guess implementing of let's say new protocols that you have already seen existing in the market. So, like really leveraging on technology, like let's say online in terms of transactions, making it more seamless and easier to use. So, I think these are the things that we would see, I guess, greater acceptance and adoption across different facets of the real estate market.
May we hear from you, Claro, and then followed by Joey?
Okay. So apart from technology, I think the other buzzword that investors and real estate players are really looking at is what we call as ESG. So that's environment preservation, being socially relevant, and good corporate governance. So even pre-pandemic, people are growingly aware of the importance of number one, preserving the environment, how your investments and how the property development actually affects the environment. And I think that is among institutional investors, that is a very important consideration. So we need to be able to plan and design cities to define sustainable and live, work, play concept amidst the uncertainties posed by the COVID-19 environment. I think that is a foolproof way of making sure that your investments are protected. For these developments also, they need to be socially relevant. There is the UN Sustainable Development Goals on impact investing. I think that is very important for investors to adhere to. And corollary to that is successful use of technology to adapt to disruptive events such as the COVID-19 pandemic. And finally, for property players, it's good corporate governance, definitely greater corporate transparency and accountability, protection of stakeholders' interests in particular, and overall branding. This will keep you ahead of the competition. That will make you very relevant, even with such an environment, an uncertain environment as we're in right now.
Thank you so much for that, Claro. And Joey, may we hear from you?
Perhaps for property players, tech, it's about time that they think out of the box. I think historically, traditionally, they've been focused on the traditional sources of growth. But for example, for office, perhaps look at the other areas that they can further grow. For example, look at companies that are implementing hub and spoke. So they are minimizing their head office footprint, But what they do right now is the other way around. They have been following the residential communities of their employees. That's why a lot of occupiers are looking for smaller office spaces in the fringe locations. So perhaps for developers, look at the fringe areas for new office development, or will it be an opportune time for them to build smaller offices and open smaller offices near the residential communities of employees? Traditionally, we have seen developers building more condominium residential towers in central business districts of Makati, Fort Bonifacio, Bay Area. We just had our property briefing, and based on our data, the Bay Area has just overtaken Makati CBD in terms of condominium stock. Right. So this just goes to show that over the past few years, developers have really been more aggressive and gravitating towards the Bay Area, mainly because they see a strong demand and potential for growth in the Bay Area. But, these are the traditional business locations already, traditional sources of growth. Perhaps now is a good time to look for fringe areas that could become alternative sources of growth or an expansion. As I highlighted earlier, you have the likes of Makati Fringe, Ortigas Fringe, Manila South, Quezon's Northern Quezon City area. And these are becoming new battlefields of residential developments. And developers are really looking at these sources of growth, maximizing the available infrastructure and the improving connectivity between Metro Manila and other key urban areas. So there are other sources of growth that they could tap, and I believe that the developers should start exploring the alternatives, the fringe areas for development, so as to grow at a much faster pace and be able to tap the pent-up demand once we get over this COVID-19 hump.
Thank you so much, Joey. Now, before we do our closing remarks, this is a question I think many of our viewers would want to ask. Despite the current situation, can you honestly say that it's still the best time to invest in real estate? I mean, what kind of opportunities, prospects await real estate players, investors, and home buyers in the post-pandemic era? Claro, you might want to go first, and then John Lo and Joe.
Okay. So we believe yes, there is there are still a lot of opportunities that abound for the property sector, and in particular real estate investments. Among the change in investment perception that has happened due to the COVID-19, and I think which is also very relevant to all investors out there, are three things. So everybody now is looking for flight to safety. So number one, so due to the prolonged pandemic, most investors would like to minimize risk, and with you can look at all the property subsectors. Um, Depending on your risk appetite, you may want to invest in office, for example, in residential, or in warehouses and logistics. So that is for your safety. So you feel safe, and you feel fulfilled when you invest in that particular subsector. Another thing that we've seen in the past is really flight to quality. So investors tend to prefer quality and recession-proof developments, and developments with amenities that provide safety nets against the spread of the virus, and flight to necessity. So one of the major impact of COVID-19 is definitely to reassess uncertainties and reevaluate what is absolutely needed in the face of the lockdown. So we're facing this lockdown again. So how do we access our office? How do we access the retail developments? Hence, we'd like to look for this kind of developments that answer to these needs when the time when we really need it, like for example in a lockdown era. So I think all of these perceptions, flight to safety, flight to quality, flight to necessity, these are all likely themes to emerge in the midterm, in the mid to long term. And for investors out there, you can look at these opportunities. As for prospects and optimism, again, the property sector, the real estate sector has a wide spectrum, and you look at each channel, you look at the bright spots. For example, in among corporates right now, it's a big news that Wilcon, for example, has registered a very strong financial performance in the first half of the year, and that's precisely because a lot of people are going into home renovation, house construction. And so I think you just need to look at what's happening around, and be able to read between the lines and read between these growth prospects and opportunities, and invest in that particular sector.
Thank you so much, Claro. John Law?
So probably the perspective I would take is this: like you would probably ask yourself, if you're an investor, individual, corporate, or a foreign investor looking at the Philippines, take a look at what's your strategy, right? I think it goes back to that. What kind of horizon are you looking at? Are you looking at return, long term? What kind of risk appetite do you have? Like what Larry said. I think that's really it's going to dictate, for example, like what asset classes or instruments you are going to look at. You're also going to take a look at your capability, or maybe I would say budget, in terms of how much money are you willing to invest in which asset classes, for what a period of time. So I think these will play a role in terms of shaping your decision making, particularly for real estate investments. But definitely, I would say there are opportunities in the market, especially during like depressed market conditions, right? And I think that's what we're seeing now, particularly in the capital markets, where there are a lot of opportunistic buyers, let's say institutional investors, private equity, really looking at bargain deals in the real estate market, trying to look at growth. Definitely, they are looking at the sectors that we have talked about this afternoon, particularly logistics, industrial. There are still a lot of demand for offices. So again, it's really more of finding the right seller also, because right now what we're seeing is a bit of a price expectation mismatch between buyers and sellers, and that has been affecting the deals and leading to a lot of friction in terms of how deals are progressing. So I think more buyers are looking at really significant discounts from their purchases. Meanwhile, sellers are looking at holding on to their prices. So there are also different scenarios there, wherein some sellers are actually not motivated to sell because they have held this property, their cash flow is good. Whereas there are also some sellers who are, I guess, cash trapped, and they're looking to dispose or unload some of their some of their non-core assets. I think in terms of prospects, industrial logistics is up there, ahead of other sectors, and I think this is where we're going to see a lot of interest from both local and foreign players in the market.
Thank you, John Law. And Joey, would you like to add to John Law and Clara's?
Yeah, sure. I think it depends on the property segment. Like for the office market, I think this is a very good opportunity for companies that are continuously growing. Those from e-commerce, health information management, logistics sectors, to secure better deals. As I mentioned, lease rates are down 20-30% in selected business districts. And now it's really a very good time for them to lock deals while lease rates are very attractive. Now, for developers, again, look at certain areas in Metro Manila and even in provincial locations. Iloilo, for example, is surprisingly has even outpassed Cebu in terms of transactions first quarter of 2021. Vacancy in Iloilo is sub 5%, very low compared to office vacancy in Cebu, which is about 20%. And even look at other areas such as Pampanga. When we had an informal survey, Pampanga, Laguna, Cebu are the most attractive locations outside of Metro Manila. So whether you are an occupant, a tenant, definitely there's an opportunity for you. Start locking in attractive deals, long-term deals at this point, while lease rates are very competitive. If you are a developer, definitely there is a demand outside of Metro Manila. So be strategic with your new office developments. Now, for the residential market, if you're an investor and end user, I believe that now is a good opportunity, good time to buy, because mortgage rates are still very competitive, very attractive. 6 to 8%. We're no longer seeing the 20-22% mortgage rates during the Asian financial crisis, and a lot of developers are extending attractive payment terms, flexible payment schemes, no reservation fees, even giving out gadgets, appliances. So we believe that if you're an end user, condominium buyer, now definitely is a very good time. Now for retailers, a very good investment, of course, is to complement their brick and mortar stalls with their click strategy. So it's a brick to click strategy. If you have a physical store, make sure that your online presence is also strong. And for industrial investments, again, for a lot of developers, they should seize the growing demand for cold storage facilities, for warehouses. Look at refurbishing all the facilities. There are brownfield assets across the Metro Manila that they can further develop and cash in on the thriving demand for logistics sector. So really a lot of opportunities, whether you're an office, residential, retail, or industrial player and investor.
Thank you again to all our speakers for giving us your time to share insights about the prospects and future of the real estate industry. I myself is very optimistic, and I'm really hoping to see that recovery for the real estate sector, where we can all again dream of having that home we can call our own, when we can go back to our offices and not worry about being infected by COVID, when we can again freely shop and dine at the malls. Again, thank you. Unfortunately, that's all the time that we have left for today. But before we officially close our webinar, may we hear some final words from our panelists? Given everything that you have mentioned today, what kind of future do we see for the Philippine real estate industry? What's the post-pandemic path for the real estate industry? Maybe we can start with Joey.
Definitely, we're seeing a much stronger recovery, Tech. We are likely to see a newer and a better normal. We're really optimistic with our growth prospects. The Philippine economy is projected to grow by 6 to 8% in 2021. Inflation is still within the forecast of the Philippine Central Bank. Mortgage rates are still very competitive. So there are opportunities for condominium buyers, for residential investors, for overseas Filipino workers that continue to drive the demand for affordable to mid-income housing here in the Philippines. That is a very good prospect for our macroeconomic growth, because OFW remittances account for 10% of our GDP, and they continue to fuel consumer demand. Retail spending $33 billion in 2020, and that is likely to grow by about 4% this year. So just imagine these remittances being injected to the economy and its positive impact to the property market. So while we're seeing disruption, definitely there are green shoots of recovery already. We could see some disruption again because of the imposition of ECQ, a stricter form of lockdown, but we need to navigate through this crisis. And as I mentioned, we need to be more proactive, agile. We need to innovate with how we do business, with how we serve our clients, with how we touch base with investors. For developers, they need to be more proactive, line up their marketing efforts, their projects to capture a much stronger recovery, a much stronger demand once we see the light at the end of the proverbial tunnel. So definitely, I am optimistic that the Philippine property market is up for a greater recovery, for a greater, a faster pick up, and it is cyclical in nature. We know that during times of global economic meltdowns, the property market is affected. But as we have seen during previous crises, after every crisis, there is that potential for price recovery, for rental growth. And this tech, this is a familiar graph that I would use. The average price of condominiums in Metro Manila crisscrossing the average GDP growth of the Philippines. And in fact, previously in 2020, I remember we asked, has the party ended? Well, we saw some correction in the residential prices in Metro Manila, but now we are on our way, on our path to recovery. And we are optimistic that we will be able to see that recovery and even surpass the growth projections that we are seeing at this point. A major recovery enabler, of course, the aggressive COVID-19 vaccination inoculation program of the government. Not only that, we're continuously banking on the government's infrastructure implementation and decentralization program. But I hope we all get inoculated soon. This COVID-19 vaccine should inject a much needed boost to the Philippine economy and the property.
Thank you so much for such positive words, Joey. Now may we hear from Claro?
Yeah, I don't know if I'd be as positive. So, but well, just to just start, I think recovery is going to be uneven, and it will create further divide and greater inequality among markets, among economies, and then that's a reality. Like right now, there's early recovery in the Western countries, despite the rise of the infection as well in these countries. But they've managed to open up still, and I think having said that, we can still capture those opportunities. Our trading partners, for example, those countries, the Western countries, now that they're recovering, that means to say also that our Filipino overseas workers can now proceed back to where they were. They can return to these countries and to these economies because they have become stronger, and they've recovered from the economic slumps that they've been in last year. I think those are some of the opportunities, and on the investment side, like right now, gross office property yields continue to go down. As of the first half of 2021, we're down to about 6.3% as per our estimate. And I think the economic policies, particularly the monetary policies set off by the Bangko Sentral ng Pilipinas, they are very much supportive of increasing the level of real estate investments and further grow the capital values, because they try to keep interest rates at a lower level, try to keep inflation at manageable levels. These things then create more a conducive environment for investors to actually thrive. And as the situation further improves and investor sentiments recover, we can definitely expect pent-up demand coming from investors to move towards not just in the core areas, but we can expect them to move towards the core areas, particularly the CBDs, where right now I think a lot of transactions are on hold or are being still being discussed. But once situation has normalized, then I think we can expect these investors to definitely look again at these assets in the core markets, and they were forced a repricing of weaker assets outside of the core areas, and this will further lead to a recovery in market activities as the level of transaction becomes more fluid. I think in a nutshell, we can never go back to the normal ways. We can never go back to where we were pre-pandemic. We need to constantly innovate. We need to enrich what we have learned from this episode. Technology, a lot of companies had to grapple from technology, from advancement into their business process. Even just work from home was such a challenge for most companies. But I think moving forward and post pandemic, these are all realities that we need to face with, and we that's the only way to move forward, to be able to enrich all these lessons that we've learned.
Thank you so much, Claro and Jando. May we hear your final thoughts on the future of Philippine real estate?
Yeah, so I think one thing is clear. It's still challenging, at least I would say, but definitely the recovery is on site. So I think it's really more about powering through the next coming quarters until we get through this pandemic. But I think the silver linings are clear, right? So given this pandemic, I think there's a lot of learnings for us across organizations, across sectors, right? That we have accelerated a lot of trends that we've been talking about but never really acting on. I think primarily is technology, and that has really transformed the way we do business, the way real estate is. So I think that's also something that we have to be optimistic about, right? That after this pandemic, we're going to see a reimagined real estate quite different from where we were before the pandemic. Definitely, we're also seeing the emergence of new growth areas that for asset classes that we never saw before, like industrial logistics. That for the longest time, no one was really making it a core focus, but now everyone is looking at it, and it's really that, I guess, transformation in real estate that keeps me optimistic about the market. Ever since I started in this industry, that it really has evolved from where we are before and where we are now. And I think it's one of the things that, I guess, in a way, I'm thankful for, that we have really managed to find resiliency in the sector and find growth and really incorporate these new things. And it will also actually elevate the real estate industry in the Philippines. So there.
Thank you so much, Rando. Again, thank you to all our panelists who lent to us today their expertise and share their insights about the Philippine real estate industry. We would also like to thank our viewers for being a part of Inclusive, the Inquirer webinar series, as well as Ortigas Land, Ovia Land Inc., Santa Lucia Land Inc., and SunTrust Properties Inc. for making this webinar possible and for partnering with us. Continue reading the Philippine Daily Inquirer for authoritative news and features. Check out the property section every Saturday for a balanced mix of light features, DIY tips, and serious news about the real estate industry. We also have the Philippine Daily Inquirer digital newsstand and Inquirer mobile, where you can easily find stories from Inquirer property. Again, this is your host, Tex Samaniego, editor of the property section of the Philippine Daily Inquirer. Keep safe, everyone, and thank you for joining us today. Have a great weekend.
Owning your dream home is now easier than you could ever imagine. Avialand will be with you every step of the way so you don't have to worry. With a personal account officer to make sure your loan application is hassle-free. To a well-made house built to last. Crafted with your growing family in mind. All within a safe and secure community to set the stage for life's biggest milestones. A house is more than just a roof over your head. It is the setting for the life you create. Avialand makes this dream happen so you can focus on pursuing all your other dreams. Premier family living made possible by Avialand.
Philippine Daily Inquirer would like to thank the following sponsors for making this livestream event possible. Ortigas Land, we build great places for life. Avialand Incorporated, premier family living made possible by Avialand. Santa Lucia Land Incorporated, building dreams. SunTrust, home for every Filipino. We'd also like to thank Inquirer.net.